Hello, John Flynn here again from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Here once again to give you my professional and honest opinion regarding the 2022 Canadian housing market. Today I'm going to talk about some of the stats I left out from last week, including Vancouver. Winnipeg is going to be thrown in there this week also, for my friends from Winnipeg, you know who you are. Toronto, Quebec, Montreal, and Halifax. But first, I want to get into the 4 words on my thumbnail. Don't fight the Fed. So anyone that watches stocks and any of that stuff, you know that phrase comes from the Federal Reserve in the States. And of course, the little puppy dog following them around is the Bank of Canada in Canada. So I just wanted to go over, first of all, that phrase. And you know, it holds a lot of merit, whether you agree with them or not. Fighting them is probably going to be a losing battle because they control the monetary system or the interest rates and whatnot. So when money's cheap, you buy lots of stocks and assets, real estate, whatever. When money isn't cheap, as in interest rates are higher and it costs a lot to borrow, you shouldn't be buying and you should be selling those assets, or if you need to or if you want to. So again, it goes to say don't fight them, which brings me to last week's meeting with Tiff Macklem in Halifax at the Chamber of Commerce. And, you know, he was giving an update on the financial situation in Canada and interest rates and whatnot. So I just wanted to go over just a couple of quick points on what he said and what they mean for the housing market. So it was on October 6th, and it says, "Restoring price stability for all Canadians" was the theme of his speech. And of course, this is just a few key points from his speech, but the ones that pertain to real estate and, of course, the overall financial situation and not fighting the Fed. So listen to what he has to say. "Businesses are reporting widespread labor shortages. At the same time, wage growth has risen and continues to broaden. With demand running ahead of supply, businesses are passing on higher costs to consumers. This is where increased interest rates come in. By raising interest rates, we are making it more expensive for households and businesses to borrow money. That slows their desire to spend, giving supply a chance to catch up." So it's very clear the Bank of Canada wants to make it more expensive because they want to slow this freight train. It's pretty much a freight train that's coming with the economy that they created. With low interest rates, they have to slow it down, and it's going to take a while. So their intent is to increase unemployment and slow down spending. They're not here to make your life easy and let you buy lots of things. That time's over. Now it's the opposite. "We need to increase interest rates more. We've increased interest rates 5 times since March, and we're already seeing results from our actions. Sectors that are more sensitive to interest rate increases, like housing, are already slowing. We'll also keep a close eye on demand to see how higher interest rates are working to cool the economy, supply to see how quickly challenges are resolved, inflation to see how it responds to higher interest rates. But inflation is still too high. It has been well above our target for more than a year, and expectations for future inflation have been rising. The longer this continues, the greater the risk that Canadians base their long-term plans on current inflation rates. This can become its own source of inflationary pressure." So that's pretty important, that one. Canadians, they see the inflation. Now they're creating their own future plans based on this inflation, thinking things will never come down. Things are always just going to go up at this high rate of inflation. So we need to buy this, and that creates more inflation. And when inflation expectations become entrenched, we need even higher interest rates to restore price stability, which leads to a weaker economy. So he went from talking previously about entrenched inflation. Now it's expectations, inflation expectations becoming entrenched. And that's why they need higher interest rates even more, which is going to lead to a weaker economy, which could mean recession, right? So for those of you out there, I guess, that think that we've reached the bottom or now's the time to buy, again, not in my opinion, not in my recipe that I've given previously, which I will update in the future. This just reiterates there's more interest rate hikes coming, and this is far from over. Okay, now on to the market updates for the regions I just mentioned. Well, starting with Vancouver. Metro Vancouver saw more home sellers and fewer buyers in September. With fewer homes selling and new listings continue to come to market, inventory is beginning to accumulate, providing buyers with more selection compared to last year, Liz said. With more supply and less demand within the market cycle, residential home prices have edged down in the region over the last 6 months. And we're going to look at their long-term averages here with the most recent, obviously, September data. And actually the detached has risen from the previous month, 0.6%. Not much, but it has risen. But it's still down just under 9% from the April high, or 205,000. The attached, they lost minimal, very similar, just 0.1% month over month. Still down 7.1% from April, or $84,000. And apartments down 5.4% month over month. So they took a big hit month over month. And they're down 10.8% from April, or $91,000. So yeah, it looks like obviously Vancouver is getting, or Greater Vancouver area is getting more inventory on the market. So it'll be interesting to watch and see how their inventory increases or potentially increases over the next few months. Now we move on to Winnipeg. First time I've covered Winnipeg, and it's for, you know who you are if you're watching, for the people I just met. And I was interested to see what's going on out there. I've never covered it. So I did look back through the Winnipeg Regional Real Estate Board's data and compiled some graphs, but this is what they had to say about the September statistics. September 2022, sales are no match for the last two exceptionally active Septembers, as sales decreased 20% and 32% from 2021 and 2020 respectively. September is a continuation of the progression in the third quarter of our market region, transitioning out of a seller's market to one far more balanced and buyer-friendly, said Akash Bedi, 2022 president of Winnipeg Regional Real Estate Board. So yeah, they were a little bit behind the curve from what I realized, and of course it's transitioning to a more balanced or buyer-oriented market. And here's some prices for you. Average price for detached in Winnipeg, it's down 15.4% from the May peak, which was $454,000, down to $384,000, and 1.3% from August to September. The attached properties are down again, the same 15.4% from April, and 3.4% from the previous month. So they've taken a little bit of a bigger hit month over month. And the condos are like a little to gain, little to lose situation, only down 4.8% from June and like $1,000 from the previous month. So yeah, not a lot going on with the condos. Now on to GTA, or the Toronto Real Estate Board. The Greater Toronto Area GTA housing market continued its adjustment to higher borrowing costs in September 2022. Sales for the month reached 5,038, but were down 44.1% compared to September 2021. New listings were also down on a year-over-year basis by 16.7% to 11,237 homes. This was the lowest number of new listings reported for the month of September since 2002. This is especially troublesome given that the stock of homes in the GTA increased markedly over the last 20 years. So yeah, their new listings are down, especially when there's all these new homes that have been built over the 20 years, and they've had the lowest numbers since 2002. So yeah, sellers are holding on, or hodling, as I said before, these listings. And it is that game of, tug of war with the buyers and the sellers right now. And I just don't think the sellers are on the right end of that game. So anyway, we'll see. But yeah, as I said in my last video, you should probably think long and hard. If you have a property to sell and you want to capitalize, you probably should get rid of it before the end of the year. I'm going to start off with the average selling price. And from what I can remember, I believe it's accurate to say that this is the first month year over year in the past year or two that the price has been down. So from September 2022, it's down over September 2021. So this was a big transition in the market, or a big turning point, I should say. So they're down 4.3% from the same month last year. They went up 0.7% month over month, and they're still down 18.6% from the February high this year, and it's just under 250,000, 247,000 lost on the average sale price of a home in Toronto, GTA. So as stated in their press release, the sales are down 44.1% from the same month last year and 10.8% month over month. For August, from August 2022 to August 2021, they were down 34%. So again, the number of sales has really decreased, and I'm sure it's close to a bottom because you have to have so many sales, right? There's a population out there that are buying homes that need to move regardless of speculation and investment. So again, I expect to see that number near the bottom at some point, but we'll keep watching it. The new listings, 16.7% fewer listings in September than there was last September, but we're up 6.6% month over month for new listings. And the sales to new listings ratio, you can see, has dropped both year over year from September last year to this year. And at the bottom there, I put from August, it was 53%, and we're down to 45% now in September. And you also have to remember, many people that list are also home buyers. So a lot of people aren't buying, so they're not going to list their home either. So it's just a very slow market overall, regardless of what the reason is. Days on market, obviously year over year, days on market is way up, and they're both listing days on market and property days on market is up a day from the previous month. And in the province of Quebec and the city of Montreal, September confirms a gradual slowdown of the Quebec city market. So that's for the Quebec city. I don't have the data on it, but it's one of the areas that they're reporting on. And for Montreal, falling sales and a backlog of properties for sale deepen in the Montreal CMA, but the rapid price decline stalls. So let's check out the data. The province of Quebec, not the city of Quebec as previously reported in their news release or in their highlight, it's down 2.3% month over month for single family homes. And this is the median price as reported by the Quebec Association, and 13.5% from the peak in May. So they've lost a good 61,000, I believe it is here. And it looks like they're going to continue their downward cycle right now, but we'll keep an eye on it. And condominium prices in the province, 9.4% from April, and down 2.5% month over month. So they're still having pretty good monthly declines in Quebec overall. So in Montreal, single family median price is down 7.7% from April, and it's up 1.9% month over month. Now the increases aren't usually as big as the decreases in the regions or areas that have these increases in September and August. They're very minimal. This is probably one of the best increases in Montreal compared to other cities in Canada. But again, like I said, the increases are not nearly as big as some of the decreases. So I guess you'd say lower highs and lower lows, right? So it's obviously trending down. And Montreal condo median price down 7.3% from June and 1.3% month over month. So condos are obviously not as hot right now. And lastly, on to Halifax from the Andrew Perkins team. And his team has to say, this is the first time in a long time that we see both condos and single-family homes selling on average slower than the previous year. Please pay attention to the wording. They're selling slower than the previous year. He goes on to say, while prices continue to rise, the number of sales has been decreasing for some time. So when he's saying prices continue to rise, they're talking about year over year. Month over month, as you'll see in the data, they're dropping. So again, not a big fan of the year over year analysis because you're leading people to believe prices are rising right now while they're not rising. If you look macro year over year, sure, but if you're actively looking to buy a home, if an agent's telling you these prices are rising right now, that's not accurate. You should really ask, how are they rising? Is it year over year, month over month, right? So month over month, they're not. It's no surprise when looking at the numbers that the market is slowing. It's been the talk of all buyers, sellers, and real estate professionals in the city for the past couple of months. Sellers, though the market is slowing, it is very much still in your favor. Halifax still does not have enough supply to meet the current demand. Buyers, you're in a better position now than you were the past 2 years to purchase your dream home. Bidding wars are subsiding, and properties are selling much closer to asking. So it's kind of a double-edged sword. Sellers, it's great. The market's still in your favor. Buyers, it's in your favor too. So I guess it's more of a balanced market is what he's trying to say. And here's the Halifax single family average price, down 14.6% from April and 6.3% month over month. Out of all Canadian data I have or I've looked at in the last few weeks, Halifax had the biggest month over month decline of any style of home and in any area. So 6.3% month over month is pretty significant, and we'll see if that continues there, but it looks like they're starting to have their big declines now. And the Halifax condo average price, 27.4% from April. So I believe this is the biggest decline almost out of any area. I think 25 to 30% is the record. So it looks like Halifax condos have that close to the record. I'd have to go through some data, but 30%, usually we haven't got to 30% in too many places. You might be able to pick a neighborhood and get a 30% decline, but 27.4% from April, they were at like almost 550 and they're down to under 400,000 and at that price point, that's a big number. And I guess what I just said last time about the detached or the single family, the condos take it here too with month over month, minus 7.4% month over month. Pretty huge numbers for a monthly decline. So I think the condo market, both combined actually, the single family and the condos, Halifax as a whole, takes the record in the last few months for the biggest declines. So that's it for the stats this week. I hope you enjoyed it. As always, please leave your comments down below. I do get requests for certain areas. I know someone keeps bugging me for Ottawa. I haven't had the time to look into it because I don't have the data and I have to research separately, but I think I'll include it in my next video when CREA comes out with the stats. I will do it for you. I haven't ignored you. I just can't get to everybody. And also in the comments, let me know if you're going to fight the Fed or not. I know I'm not going to. I'm not going to speculate. It's convenient for me because I'm already on the same page as them when it comes to that. I wish I had followed or not fought them on the way up with certain things, but hindsight is 2020. But anyway, thanks again for watching, and I will see you next week.